ASX 200 Live, ASX ends down 1 PC, biggest fall since April as CBA, Westpac sold. Imagine waking up to find that the Australian stock market has just experienced its biggest one-day drop in months. That's exactly what happened recently, leaving investors questioning whether it's time to rethink their strategies. But here's where it gets controversial. While some see this as a moment to panic, others view it as an opportunity to buy into high-quality stocks at a discount. So, what's really going on? Let's dive in. The S&P ASX 200 ended the day down by 1%, shedding 89 points to close at 8,668.20. This marks the steepest decline since April, when markets were roiled by tariff-related concerns. The fall came as a surprise, given that ASX futures had only hinted at a much smaller drop of around 49 points. And this is the part most people miss: what caused such a sudden shift in sentiment? Analysts suggest that profit-taking was the primary driver behind the sell-off. After weeks of strong gains fueled by optimism about potential interest rate cuts from the Reserve Bank, investors appear to have decided it was time to cash in. Tony Sycamore, a market analyst at IG, noted that the sell-off seemed to come out of nowhere, with no clear catalyst for the sharp decline. He likened it to similar patterns seen in March and August of the previous year, where rapid gains were followed by abrupt corrections. "It's almost like déjà vu," he remarked. The big question now is whether this is just a temporary blip or the start of something bigger. Banks bore the brunt of the selling pressure, with financials leading the downturn. The sector fell by 2.2%, dragging 9 out of 11 index sectors lower. Major players like Westpac, Commonwealth Bank, ANZ, and National Australia Bank all saw significant declines. For instance, Westpac dropped by 3.6% to $33.07, while Commonwealth Bank slid by 2.5% to $177.87. Investors may be worried that lower interest rates could squeeze bank margins, making these stocks less attractive despite their recent performance. However, not every stock succumbed to the bearish mood. AMP stood out as a bright spot, surging 9.8% to reach a 5-month high of $1.69. This uptick followed a robust second-quarter update showing positive net inflows into its superannuation arm, the first since 2017. Similarly, South 32 defied the trend, climbing 4.5% after announcing it had exceeded its full-year production targets thanks to solid output across key commodities. Materials also managed to eke out modest gains, supported by rising iron ore prices. Futures for the steel-making ingredient climbed to a 4-month high, bolstered by China's ambitious plans for a megadam project in Tibet. This development has renewed optimism about demand prospects, pushing Fortescue Metals up by 1.7% to $17.25 and lifting Rio Tinto by 1.2%. Even BHP eked out a small gain of 0.4%, although Macquarie recently downgraded the miner to neutral. Elsewhere, individual company stories added intrigue to the trading session. Insignia Financial dipped 5.8% to $3.93 amid ongoing talks with CC Capital, which has made a $3.4 billion bid. While negotiations continue, there's no guarantee they'll lead to a formal offer. Meanwhile, Block, formerly known as Afterpay, soared 11.2% after being selected for inclusion in the prestigious S&P 500 index on Wall Street. This move comes after Chevron Corporation acquired Hess Corporation, paving the way for Block's elevation. Cromwell Property Group also caught attention, rallying 8.2% to 39.5 cents after Brookfield finalized a binding agreement to acquire ESR's remaining 19.9% stake in the listed entity. So, what does all this mean for you? Is the current dip a warning sign of deeper issues ahead, or simply a chance to pick up quality assets at reduced prices? Could stretched valuations in certain sectors signal trouble brewing, or are we merely witnessing routine market fluctuations? These are questions worth pondering and debating. Share your thoughts below. Do you think the ASX will rebound quickly, or are we headed for more turbulence?